And let's spend some time talking about the oil industry now. Penn Energy is the largest conventional energy trust in Canada, and it reported second quarter results that were slightly ahead of its production forecast, company benefiting from rallying oil prices. Murray Nunns is President and Chief Operating Officer at Penn Energy Trust, and he joins us now live from Denver with a company outlook. Welcome, Murray.
Thanks, Lori.
All right, so your second quarter results were above expectations, but as the BMO Capital Markets analyst points out, you did get a nice boost from a one-time gain. So what are you doing to make up for that and to increase profitability going forward?
The one-time gain was on a transaction on currency, and that result was from some hedges last year. More importantly, from our perspective, the efficiencies that we've started to get back into the organization. Last year, we went through a major merger, bringing those two entities together, and now we're basically holding production flat and using only about half our cash flow. The other half goes to unit distributions, and the yield on our paper is about 13% right now. So we're just striking a nice balance, but the efficiencies are coming back into the industry as the cost structures come down in Canada.
Let me clarify that you're holding production levels steady. You did beat oil production forecast in the second quarter, but the analyst community is actually increasing their production forecast for this year and next.
I appreciate their optimism. Part of what we're driving towards is a transition from a trust model where we distribute about 50% of our cash flow sometime in the next 18 to 24 months to becoming a full-fledged exploration and producing company again. And at appropriate times, as we prove up our oily inventory, what we'll do is drive through and start putting more dollars into the ground. I think that's what some of the analysts are starting to anticipate.
Okay. Now, Cormac Securities did raise its recommendation of your stock from a market perform to a buy today. This is your only buy rating. So then how do you plan to improve investor confidence and Wall Street's view of the stock?
The fundamental behind ourselves, unlike a lot of the gas resource plays that are out there, we have a very large set of oil legacy assets. And one of the areas where we've really delved into is applying the horizontal frac technology, which has opened up the shale gas plays to existing reservoirs in Western Canada. That's really our target for key applications and where we see we can really gain in the efficiencies of our organization over the next 18 to 24 months. And this technology is relatively untested in oil. We look across a lot of the operations in the States, they haven't made that technology leap yet. We're already traveling down that road in Canada, and the early indications are it can be highly successful and highly applicable to existing oil fields and tight oil in our large asset base.
Crude oil prices have been higher of late. What is your outlook for prices, and how are you figuring them into your forecasts?
Our outlook for oil is in the $70 mark, approximately. We're really obviously sitting on the sidelines with the natural gas side of the equation and waiting it out, let it play out a little longer. We think there's some volatility in the future of natural gas as supplies start to slide. So fundamentally, all we look at is hedging out enough of our position to guarantee our cash flow and guarantee our distributions over the next 12-month period. And that's how we're going at the market. So we layer in on a progressive basis, and we have over the last 12 months. So we're well set up for 2010 in terms of protecting our cash flow.
And recent tax law changes, as I'm sure you're well aware, in Canada have significantly changed the tax structure for royalty trusts. So will your company remain a royalty trust, or are you considering a move toward a conventional exploration and production company?
We will move towards the transition to an E&P company. We believe we have the assets in the inventory. We've got to do it in a stepwise progression. We have to prove up enough inventory. We have a window between 2011 and 2013, which we'll do that. We have enough tax pools, or loss carryforwards would be the U.S. equivalent, to protect ourselves through that period. So we can really pick and choose our timing, and it's really as our inventory is ready for that type of progression, we will move to an E&P company, though, eventually.
All right, we'll leave it there. Many thanks to Murray Nunns, President and Chief Operating Officer at Penn Energy Trust.
Good. Thanks, Lori.